Welcome back to the Atlanta Startup Podcast. My name is William Leonard, your host for today, and I'm excited to sit down and talk more about venture capital and investing with Armond Davis, who is the managing partner of the Paragon Group. Armond, thank you for joining me today.
Thank you so much for having me. It's great to be here and looking forward to a great conversation.
Yeah, likewise. It's great to see you again. I appreciate you judging Startup Runway late last year at the High Museum in Atlanta. That was such a fun experience, wasn't it?
It was a fantastic experience, man. First of all, kudos to you guys for one putting together the event and executing it at the level that you did. Second, shout out to all the founders that were there, the ones who presented and the ones who were there. The level of talent in Atlanta is far, far underrated in terms of on a national scale. I think that Atlanta can compete with any other city in terms of the level of talent with the founders. You may not have the sheer volume or number of founders that New York may have, but the level of talent is there. And I think that it's really an area where that's ripe for investment because I think that the returns, because of the fact that it's an often overlooked area, that you can get great returns investing in the Atlanta ecosystem.
Man, you are preaching already. I love it. That is,
Yeah.
I think every investor founder here locally resonates with that message there. But let's dive into the conversation today, Armond. I definitely want to talk more about your experiences and Paragon Group and how you all invest and really get your thoughts on the macroeconomic environment right now here in early 2023. But let's start from the top and talk about your background and what led you to build Paragon Investment Fund.
Well, I mean, for me, my pathway is very non-traditional into venture. I didn't work at a Silicon Valley firm. I didn't work at a venture firm, even in a venture firm in Atlanta, and doing deals, in that way. My pathway was actually a little circuitous in that I had education in finance, MBA in finance from Florida A&M, and I came to Atlanta. I worked at Goldman for a short period of time. I worked at SunTrust Bank for a while. Worked in the equity trading desk, and then moved into equity portfolio management. But then I started. I didn't get bit by the entrepreneur bug because I'd always wanted to be an entrepreneur. But I found around 2005, 2006 that I was really looking to do something else, right? And so I did my first M&A deal. Went and bought a small business. It was a small construction business, late 2006, late 2007. I thought I was the smartest guy in the world. Fantastic year. It's just like, I don't know why I thought I would ever do anything else. And this is amazing. Running this business, operating this business is amazing. And then 2008 happened, and I was no longer the smartest guy in the world.
Right.
And by 2010, I was on the verge of bankruptcy. And literally did not know if my lights were going to be on the next day, if the repo man was coming to take my truck away. I was in that position. I mean, and was really struggling. I had filled out all the paperwork and prepared all the forms, was ready to file, and got to the bankruptcy attorney's office and sat in my truck in the parking lot. And man, I just couldn't get out the truck. I physically couldn't move and couldn't get out the truck. And so after about 30, 40 minutes of sitting in front of the office and not being able to get out of my truck, I just drove back home and vowed to figure it out. And so I used my experience and from business school and from finance, to negotiated, lower rates on loans and made difficult decisions in terms of cutting expenses, empowered employees to make decisions in the field that allowed the company to run more efficiently, expanded the service offerings for the firm to be able to capture revenue, from multiple different sources, and very proud to say that although there were many weeks where we did the payroll and it came up and I didn't get anything at the end of that week, but
Right.
that's a part of being the owner and being the leader, right? But even though we had many weeks where that happened, I'm proud to say that we came through it, and I didn't lay anybody off.
Mm,
Never had to lay anybody off from the business. And so went through that and came through that,
mhm.
and really wanted to merge my experience as an operator along with my experience in the investment side. And so venture was kind of a natural
Mhm.
segue for me in doing that. And so I work with founders pre-seed, seed stage,
Okay.
and really bring to the table the benefit of actually running businesses. I ran a couple of other businesses as well, in addition to this business between 2006 and today.
Mhm.
And I bring those, not just that, the lens of an investor to the table, but also the empathy, right, of a founder, and understanding how to run a business and the choices, the difficult choices that go along with that, you know.
And so what a fascinating story from, being on the brink of bankruptcy, not knowing how you were going to keep your lights on to now, running Paragon Fund and taking over a construction company back before the investment and financial sector crashed. And so now as you think about the Paragon Group, Armand, you mentioned early stage, pre-seed, seed stage founders. What specific industries are you targeting, or are you more so pretty general and agnostic?
Yeah, I'm industry agnostic. When you're talking about businesses that are at this stage, right? These businesses are heavily founder dependent.
Hmm.
And so for me, it's really more of what when I'm looking for something, it's really more of what I'm looking for in the founder.
Right.
And so there's talent across a wide array of industries. In fact, you could even make the argument that because there's so many VC dollars and so much VC focus on tech, that tech is inherently overvalued.
Hmm.
And so I will invest in tech businesses and tech enabled businesses, but I also will invest in a really talented founder in infrastructure and health and beauty,
Right.
uh, in other industries that are not considered to be quote unquote high tech, or more kind of low tech, what they consider them to be. Although everything is really tech enabled at this point.
Exactly. Right.
Yeah,
So you have this focus more on the individual, the team, the people.
100%, 100%. Yeah. So yes, you do have to have a viable product, right? I'm not an angel investor. Okay, let me make that clear. I'm not an angel, but you got to have a product, you got to have a service. You have to have demonstrated that there is a demand for your product or service out there. But from there, it's really what I'm looking at in terms of your approach to not just business, but to life.
Hmm.
So, I invest exclusively in female and ethnically diverse founders. And so there's a lot of trauma that comes from being a woman that has grown up here or even grown up somewhere else and is trying to grow and build a business in today's venture capital ecosystem. There's a lot of trauma, right, that goes along with being an ethnically diverse founder, a Black man who is trying to create a business. I talked with a founder I believe it was just yesterday, brilliant founder, who said that she was in the process of pitching and raising capital for the business. And she was told that I almost laughed to say, you have to laugh to keep from crying. She was told, oh, yes, this is a fantastic business. This is a fantastic idea. This is a revolutionary product. I just don't think that, as a woman who is not from the United States, that you can execute on this and take it to where it needs to go.
Hmm.
And a founder literally told, I mean, an investor told her that to her
Mm.
face. So I'm here to tell her, yes, no, you can do it. It was your idea. The universe gave you this idea for a reason.
Yeah.
And so it didn't give it to the white boy from San Francisco.
Hmm.
So it's your idea. It was given to you for a reason.
Right.
And move on it. And you'll be rewarded. The universe will reward you for continuing to move in your purpose. So
Yeah.
that's really what I'm looking at. The determination, the ability to survive, the ability to do more with less, the mindset of abundance, as opposed to having a lack mindset.
Yeah. Yeah. And I think we're going to dive into that.
Yeah, we'll dive into that. Yeah.
Yeah. Yeah. We're going to dive into that a bit later in the conversation. But, you mentioned a lot there and really reflecting on your experience of, running companies historically in the 2010s and in your investment experience from, Goldman and Truist, how did you initially think about crafting the thesis for Paragon as a whole?
Well, so that's a really interesting question. Uh, One, my thesis is that let me state my thesis. My thesis is that female and ethnic diverse founders are two of the most disadvantaged groups by the current system. And ergo, really out of necessity, they will lead in innovation that moves society to new systems,
Mhm.
right? So, and so that being the case, if you can invest in those founders at an early stage, then you can make above market returns. And I think that the data is starting to really come out and show that women outperform the market in general. When you invest in them, ethnically diverse founders outperform the market when you invest in them. And so I assembled that thesis off the fact that one, I'm an ethnically diverse founder, right? I started a business, I grew this, and I know all of the headwinds that I had to deal with, whether it be access to capital, whether it be wealthy clients who don't see you as capable or qualified, and you have to prove yourself so much more than your counterparts do. And so the thesis was born out of my own experience, but also through my observation. I
Mhm.
come from a matriarchal family, and the women in my family are all far more intelligent than us men in the family. And so I have never questioned the ability of women to outperform or to lead. And
Mhm.
so it comes a lot from my lived and observed experiences.
Got it. Got it. No, I mean, aren't those the best sort of initial starting points for a thesis? Something that you've experienced, lived, and have helped maybe somebody navigate through before. And now you're just kind of taking that thesis and putting it on a broader scale to help more and more individuals with capital now. So,
Right. Well, and so yes and no, right? Because the thing is, the yes is that, right, you've lived it and you've experienced it, and so you're convicted, right? The no is that because you've lived it and experienced it, it becomes sometimes a little more difficult if I'm talking to someone and saying, well, this is kind of a no-brainer, right? I've lived this. This is in my bones, right? I've lived this. This is my life experience that this is true, that this thesis is true. And you're talking to somebody and trying to convince somebody who that may not be their lived experience.
right, right.
And you have to try to convince that person to invest based on your lived experience, not their own,
Yeah,
right?
exactly. And so, Armand, I want to shift the conversation here a bit to talking more about, right now, today in February of 2023, we've seen, and I'm sure you've seen as well, everybody has seen the fundraising environment really become constrained over the last 12 to 15 months. And, the outlook looks pretty bleak. You see
Yep.
layoffs from big tech and big corporations. You're seeing that the interest rates are rising. Capital is no longer free like it once was. I think from
Right.
the side of things, diligence cycles are much, much longer, and overall VC dollars deployed are down. And so, in the midst of all this negativity and all the headwinds that founders are facing, where do you see some areas for opportunity for the scrappiest, most persistent founders to be looking at right now when it comes to building a company or fundraising?
Man, that's a fascinating question. There's so many parts to that question. The first thing that I do want to say is that, yeah, I get asked every once in a while, usually from someone who doesn't look like me, that I get asked, are we going to have a recession? And I have to point out in the moment, right, that there's privilege in the question, right? Because if you're a female founder, right, if you're an ethnically diverse founder, recession is here. Recession has been here. Recession has been here since, like you said, 12, 15 months.
Yeah.
Now, there are still some people who are wondering if the recession is going to hit them. But like I said, there's privilege even in being in a position to wonder if you're going to be affected. Because this group of founders, this specific group of founders, particularly ethnically diverse founders, really the cash flow didn't start to come in until post George Floyd's murder. So let's say summer of 2020. He was murdered in May of 2020, right? So let's say summer 2020, you really started to see significant inflows into this space. Well, by January, February 2022, that had been cut off. So you got about 18 months. You have 18 months. If you didn't get in right then in that short window, then you might have missed out on it. So what I'm seeing is a continued shift away from diversity in terms of asset allocation on the part of investors, which I think is counterintuitive, frankly, because I actually do believe that now is the time to actually double down on it, not just from a social perspective, right? Because we can always make a social case for doing this, for investing in underrepresented founders. But if you want to see sustained investment, long-term investment in underrepresented founders, you have to also make the business case for it, right? And so I think that now is a fantastic time to deploy capital to underrepresented founders who are being impacted by significantly larger margins than their majority counterparts. I think again that doing so, these founders have the talent, these founders have the ability, they have the imagination that they will overcome, and they're used to doing more with less anyway. And so if you actually level that playing field, you give them not just access to sufficient capital, but also give them the benefit of your knowledge, your experience, give them the guidance in terms of, as we'll talk about, working on the mindset of things, working on the approach to things. I think you will see significant returns. I'm telling potential LPs that no, this is actually the time to double down on this.
Right. Interesting. No, I mean, I think you're right, 100%. And do you see opportunities for these founders when it comes to, fundraising? You're right. There is what seems to be a flight away from diverse founders and capital being allocated to their startups now. But in the midst of all that, do you see any opportunities for founders that you can call out who are fundraising right now, diverse or not?
Well, yes. And for example, infrastructure is, I mentioned it earlier, but we just had a, huge, massive infrastructure bill that's passed. And so businesses that are in that space, construction, engineering, architecture, design, all of those that fall underneath that space, those businesses are poised to be able to grow. And the interesting thing is that, especially if you look at, for example, the construction space, we have generations of history in that space as underrepresented founders. And so for us, it's never been the issue of, do we have the knowledge? Do we have the experience to execute? But if you get a $50 million contract to, fix the bridge that crosses the Ohio River, right? It was the bridge between Cincinnati and Kentucky. If you get that contract, $50 million contract, you got to do $10 million worth of work before you can get your first check. Well, most of us are not in a position to be able to finance to do that.
Yeah. Yeah.
Right. So for me, there's an opportunity there to invest in those businesses. There's an opportunity. I mentioned health and beauty space. To me, this thesis has been proven by Bevel, by Sundial, right? That there is room and space there for products that cater to, are created by, and cater to different ethnic groups. And with proper investment and proper distribution, that these businesses can really grow. The quality of the product is there, right?
Yeah, I agree 100%. And, I think, I want to segue into that, by asking this next question of, you're actively deploying capital right now. You're meeting with founders every single day. What are some of the core metrics that you are looking for and assessing in the founder meetings that you're taking right now? And have they changed from, a year ago?
Well, for me, they haven't, and that is because of my approach to working with founders, right? And so, yes, I'm gonna look at your P&Ls, and yes, I want to see your EBITDA, and I want to see your ARR, and I want to see, yes, all of those things, all of those great and wonderful acronyms are fantastic. But one, we're talking about early stage.
Mm-hmm.
So these businesses are usually 3 years or less. So there's not a ton to be able to pick out there in terms of a pattern, right? And number two, the fact that we had the downturn start for many of these founders last year, if you want to see 3 straight years of EBITDA growth, right, double-digit EBITDA growth, or whatever you want to see, well, you're more than likely aren't gonna have that. And you may have some that do still have that, and great for them, but you're excluding a lot of really great and talented founders if that's your deal breaker as an investor. So when I'm meeting with a founder, it's really more, what I'm really looking at when you talk about metrics is, what's the vision? What's the long-term vision for the business? How do you plan to scale? How do you plan to adapt and pivot? Because everybody's going to hit that first big wall, and it may be in terms of not necessarily having access to the capital as easily as you used to be, but there's also going to be some fundamental challenges to the business. So how do you deal with adversity in that sense? Have you dealt with adversity before? You think about it, if you've got a business that's pre-seed, seed stage, if you're a first-time founder, more than likely, even if you're possibly a second-time founder, you've never run a business in a recession.
Right.
Because the last recession ended a decade ago.
Mm-hmm.
And it's just been real great, right? Ever since then until last year.
It's been up and to the right.
That's right. That's right. And so, you want to understand how people are dealing with things. You want to also understand if people are coachable. Coachability is a massive, massive thing for me. Particularly, like I said, I'm dealing with a founder that's in a pre-seed or a seed stage. You've got to be open to, you don't know it all. I don't know it all either. But you've got to be open to having this. It can't just be, well, give me the money and let me go off my way. That's not how I work or how I invest.
Right. And I think, it's important right now. I think pitching in this exact moment has been difficult for a lot of founders because I think many companies aren't focusing on, the quantitative value propositions that they present to clients. Because you look at the market right now, larger companies, enterprise customers are cutting contracts with products that they don't need. And so I think as you approach investors from a founder perspective, in your pitch, you should harp on quantitative value propositions. I think the best products are going to directly drive their customers' P&Ls, right? You're either increasing revenue, decreasing operating costs for your clients. And I think demonstrating this quantitative value prop will keep your product in full swing for your enterprise clients that you're working with now. And then I think it's also about avoiding incrementally great products, right? You want products that are 20 times, 100 times better than what your clients are using right now. And especially from a product sustainability and longevity standpoint, right? Companies are cutting what they don't need right now. And I think as a founder, if you can focus on the products that are providing unbounded efficiency for your clients and truly moving the needle for how their company operates or serves their clients, you are going to succeed and raise money in this environment, no matter how bleak the recessionary outlook may be for all companies at the early stage. So that's just my 2 cents on, metrics and things that investors are looking to hear and see within early stage pitches right now.
I agree with that. I think that, my ideal founder, right, is someone who's is a very product and service focused founder, right? So one that's obsessed with best in class product service, and where they need help is more on the business side, more on the scaling, and more on the mindset and helping to develop a growth mindset. But really being committed to offering best in class product, best in class service. One of the questions that I ask the founders is the kind of three whys. It's like, why this business, why you, and why now, right? And so what's inherent in that is, again, why this business, as in why does the world need this business, right? Why does corporate America need this business? Why do your clients need this business? And then why are you the person to bring this business to them, as opposed to someone else to bring the business to them? And then why is now the time?
Yep.
Business. What are the pain points that you are addressing, and are these pain points significant enough that you can generate long-term revenue growth with this product or service? Once we get past that, and those make sense, then now we really focus on you, the founder.
Yeah, I see a lot of pitches missing the why now. I think talking about the momentum in the industry as a whole. So, for example, you just gave the infrastructure bill. That is $1 trillion why now opportunity across dozens of sectors that are going to be impacted. And I think, examples like that, just talking about the why now, the macroeconomic momentum that is driving the building and product vision, I think is a big aspect that a lot of founders overlook in their pitches.
Yeah. I was gonna ask you, when you're talking with founders, are you seeing that there are not, I know we're seeing that there are fewer checks that are being written, but are you also seeing smaller checks being written when they are being written?
Yeah, I think, I've seen that in the industry as a whole, just because there are no longer, the $10 million seed rounds that we were seeing, and the $7 million seed rounds. I think, seed rounds are probably in the ballpark now, are probably 1 to 5, maybe at the max. And, I just think that investors have far less appetite for valuing a seed stage, pre-product, pre-revenue company at, 30, 40, $50 million. I think valuations are just coming back down. And in turn, check sizes, round sizes are coming down as well. But I'm also seeing that investors are at the seed stage still actively deploying capital, just like us. We did, I think 7 new deals last year, and we are really taking advantage of the opportunity in market right now.
I think that's accurate, and I will add to that from a VC perspective, from an investor perspective, again, this is the best time. You think about some of the businesses that are huge and most known businesses today. Many of them came out of recessions, right? Airbnb, I believe, came out of recession. I think even with Facebook was 2008, so right as the thing was crashing, I want to say. But um, plenty of business, Uber as well, came out of recession. So what you have now is, one, you've got a ton of really talented people getting laid off their jobs.
Right.
And they've got to figure out a way to thrive or figure out a way to survive. And a lot of them are going to move into entrepreneurship.
Yep.
And those people are, they have experience, they have talent, and they understand from the enterprise level, right? What the market needs and what the market is demanding. Now, the other side of that is you have the micro businesses that are quote unquote niche businesses, but now because you can't just throw money in the S&P 500, throw money in equity markets, in order to find returns, you've got to be more resourceful as an investor. And those businesses are poised to really be able to take advantage of the inefficiency in the market if given access to proper capital, proper guidance. And so it's my job, right, as a fund manager, to find those founders, find those businesses, and to deploy capital. And the truth is, with valuations coming down, then I can get into a really great business now, right, with a $500,000 check and own a significant piece of the company versus 2-3 years ago, a $500,000 check wouldn't get me a significant piece of the company. And so I'm able to get in, have a significant piece of the business, and really help the founder to grow and scale.
Yeah. And to that point, I've been speaking to a lot of other investors and just hear the emphasis on entry points are really top of mind for them. So valuation is becoming much more of a deciding point on actually investing. I saw, a relationship on Twitter where, a founder, he wanted a $20 million valuation. The investor wanted 17. And because of that $3 million valuation difference, they couldn't come to a deal and they passed. And, that small amount probably wouldn't have been too much of a talking point or a decision point 2021, maybe early 2022. So now I think investors are much more sensitive to valuation and ownership targets nowadays.
Yeah. Yeah. Well, look, I mean, if the guy wants a $20 million valuation and he's got enough, investors lined up to come in and complete his raise at $20 million, then more power to him. It just may not fit for the guy who valued at 17. If when you start looking at it in percentage terms, right?
Right.
That $3 million difference, it seems like it's insignificant, but if you're talking about $3 million into $17 million, well, that's a little under 20%, right? And so, if you call it 15%, well, that's a significant difference when you talk about your IRR, when you talk about the capital that you're returning to investors. If you basically are overpaying by 15%. And so I think but I think another factor is how the investor works with the founder, right? Because if you're the kind of investor that you're going to come in, you're going to write your check, and then the founder has to go off and execute their plan, right? And you're on a call every quarter with an update. You're getting that update every quarter, but you really aren't rolling up your sleeves and getting in the trenches with the founder, then that $3 million difference in valuation really does impact you, right? For for me, I would say it may not impact me as much because I certainly understand if I'm going to work with a founder, one, I'm rolling up my sleeves, I'm getting in the trenches. I'm on investor calls with the founder, helping to secure additional capital. I'm on sales calls with the founder, helping to secure new clients. I'm really working heavily and closely with the founder, not just in terms of the formulation of the growth strategy, but also the execution of that strategy. And so I know that if I can come in and if I'm working with the founder, that the boost that they get in terms of the impact, that certainly we'll take it from, and to use the example that you gave, we'll take it from 20, from 20 to 50 million. And
Yeah.
so then if you take it from 20 to 50 million, then you aren't so mad that you got it in at 20 versus got in at 17.
Right. Right.
Yeah.
And no, that those are all great points there. And in that anecdote you touched on, it really depends on how you work with founders, right? And I know, Armand, you have a pretty strong thought process around
Yes.
mentorship and mindfulness. And many VCs pitch themselves as value add investors, whether they're like founder friendly or they make enterprise connections or whatever it may be. But I've heard very few investors tailor their value add around tending to founder mindfulness. Let's dive into that a bit more and how
Yeah.
it applies to your strategy at Paragon.
Well, it's everything, because at the stage that I'm investing, I say to the founders, your business can't outperform you. So if you've got imposter syndrome and you struggle with it, right? If you've got childhood trauma and you haven't addressed it and it holds you back, you get paralyzed. If you've got relationship problems and you spend 2 days a week fighting with your significant other about you working too much, well, that has a direct impact on the success of your company and the success of your business. And frankly, it doesn't matter how wonderful your product or service is, if you can't overcome those things, you won't thrive, you won't make it. And one of the things that I've found is that some of the most successful founders, they may not have necessarily the best product or the best service, but they have the ability to focus and to be really, steely-eyed in the face of adversity and be able to push through, be able to block out the world and focus on what's in front of them. And
Right.
so I really work with founders in trying to help them to become the best version of themselves.
Mm.
And my thought process is very simple, is that if I can work with you, if I can help you to become the best possible version of yourself, then the best possible version of your business will follow.
Right. I love
Right.
it.
And so as a part of that, and as I'm thinking about the mindset of a founder, I do require that founders mentor other founders. So if I'm going to invest in you, then you're going to mentor either another founder in your geographic area or in your industry.
Mm.
And one, because I understand as a person who has been both a mentor and a mentee, I understand that the benefits are actually mutual. It's not a one-way thing. It's not that the mentor just pours into the mentee, but you also learn from your mentees. And so it helps you as a founder when you are working with other founders that are coming up and going through things that you've been through. And it also is indicative of your mindset. And so
Mm.
we go into that word again, right? And so often you'll find that we're raised kind of with a lack mindset, right? You got a birthday card when you were 10 years old, it had $10 in it. And what did they tell you when they gave you? Oh, don't go spend that, go put that away, right? Go hide that, go put it under the pillow, put it in the piggy bank, under the pile of clothes, in the back of the closet. But if you think about it, that's the complete antithesis of what the most successful investors do,
Mhm.
right? And you're not supposed to be a stop point for capital. You're really supposed to be a vessel for capital. Money's a tool, just like a hammer,
Right.
right? And so trying to help underrepresented founders to get out of that lack mindset and to open themselves up to having a mindset of abundance is something that I really, really work on. And so, I talk with founders and they say, man, I've got to get an advisor and someone who's an expert in the industry, and there's an expert at this product, and they're expert at getting people into boards and getting people. And I always say, so who are you working with? Who's the expert in you?
Right.
And they're like, well, I don't have time to think about that. And I don't think about myself. And I'm just all about the product. And it's all about pushing the business forward and those things. And I said, it won't move forward without you.
Mm-hmm.
It has to be you. Keep the main thing the main thing. The main thing is you, the
Right.
founder. And so let's clear the cobwebs. Let's overcome those hurdles. We make therapists, licensed therapists available. Talk with founders. We make founders available to each other for portfolio companies, available to each other to share their experiences, because founders that are all over the country, right? And so working and understanding that you aren't alone in this process is a huge, huge part of this. The number one thing that I get from founders especially early stage, that are first time founders, is the alarming loneliness of the job.
Mm-hmm. Oh yeah.
Right?
That's a
Because,
whole other episode we could talk about there. I've heard that so frequently.
man, I mean, you think about, I mean, a lot of these people in their 20s, early mid 20s. Man, when I was in my early mid 20s, I was in Atlanta. I was having a good time. I'm, going to the club every Friday night. I'm doing the things that the single 20 somethings are doing, right? These people are working.
Mhm.
And so they lose a lot of the connection that they had with their friends from college. No one else, everybody's working these 9 to 5 jobs or these 9 to 9 jobs, but it's still a job. And it's a difference when you're working and you're getting a check on the 1st and the 15th,
Mm.
right? Versus when you're working those same amount of hours, if not more hours, and you don't know when you're going to get another check.
Yeah.
And it affects you, shapes you, right? And so helping founders to understand, hey, you're not alone in this, right? And hey, I've been there, right? And stay focused on why you're doing this. What's your why?
Right.
Because it can't be just to make money. It can't be just to make money. You have to be serving a purpose, right? And walking in a purpose. And if we can help to find that, identify the why here, then that's what makes you get up and go. And that's what makes you push through the adversity.
Yeah. I love it. I love it. That is just fantastic insight as to how mindfulness not only impacts the founder, but the company. It impacts everybody. So I love your approach there. And, Armand, as we wrap this conversation up, what is the best way for, a founder who's listening, who wants to pitch you? How can they get in contact with you?
Well, you can pitch me through the site, paragoninvestmentfund.com. And there's a link there for prospective founders, and you can go through. There's like a form you can fill out that'll ask you some of those questions, some of those why now questions, and upload your deck. So you can do that. I'm on LinkedIn. I don't know. People don't people don't have LinkedIn handles. So I'm on LinkedIn. It's, Armond Davis. And I'm also on Instagram and Twitter, but please you don't have to pitch me via Twitter. send me send me a tweet, 30 tweets back to back to back with your pitch. So
I love it. I love it. Well, Armand, this was a fantastic and insightful dialogue from, learning about the origin story of you almost being on the brink of bankruptcy to now, helping founders in your portfolio think about mindfulness and product vision and growth and achieving scale. So I'm excited that you're here, doing this in Atlanta. I think there's ample opportunity for founders who are fitting your thesis to be supported by a visionary investor like yourself. So I appreciate your time, Armand, and looking forward to seeing you around.
yeah, man, thank you so much for having me. Enjoyed it. Certainly, this would be the first of many conversations you and I have, and looking forward to seeing the things that you do in the Atlanta startup ecosystem, things that you continue to do as well. And I hope that the people that listen understand the amount of thought and effort that you put into what you do, and your commitment to working with and helping founders to achieve their goals.
Awesome. Armond, thank you.
Yeah, thank you so much.